Hi traders and welcome to the Technical Analysis Market Watch on Friday the 19th of January. So I've seen some really good movements in all of the currencies that we talk about every week, and we had some serious levels hit this week actually. So let's jump into the analysis and see if we can identify any trades for today or early into next week. All right, let's start out here with the Aussie USD, and we can see that we've had a very, very big sell-off from what we were talking about last week. Look, ideally, when you're seeing wicks hit underneath the moving average, we know the moving average is extraordinarily respected. You can see that you don't have to be blind, Freddie, to even understand that the 20 moving average is important to all indices, and stocks and currencies. But in the Aussie USD in particular, you can see how well it's been respected on the way down here, on the way up, and again on the way down. Once it does turn around, all of this wick action that we can see hovering underneath the 20 moving average is a very, very strong sign that although support is here, it is being driven down by the moving average, and the factor that once it does break through the support, this is inevitably what generally happens when the momentum is very strong and a support level gets broken. It went straight down to our level at 65.50, obviously. So hopefully you were able to catch hold of that trade because it was a relatively easy one in the context of what we've been speaking about, but also in the technical analysis on the smaller timeframes. So it hit its target. Look, we know there's relatively strong support here as well, but just below here at 65 cents, there is very, very strong support. Again, you can see all of this resistance and support from earlier, a very, very important zone as well. Look, it had a serious crack at getting down there. It has rebounded a little bit. No real surprise there. It may rebound a little bit more, but really the price action on the smaller timeframes is our guide there. We don't want to be doing anything too extravagant, but what we want to be looking at is the opportunity for either a reversal and a break of this zone. If we do get a daily close below the 65.50, I would be looking at targeting the 65-cent mark. It would be attracted to it like a magnet. If we see a series of higher highs and higher lows on the smaller time frames, though, I'd be looking for a bit of a rebound back up to this level here, which is around that 66-cent mark. You can see that we've got a lot of support at that level there. What I'll do, I'll put a marker there so you know what we're talking about for next week. That is the level that I'd be looking for to get a rebound off. So if we get a series of higher highs and higher lows, say on a 1 hour chart, I'd be looking at targeting. It's not a lot of pips. We're only talking about 20 or 30 pips here, but that's enough to get a scalp in. We've been talking about scalping quite some time now. We still haven't got our directional biases picked out for the year because we still haven't had enough market movement. So what we want to be doing is looking for those opportunities in the meantime until we get a clear break either side. So good trading on the Aussie USD. All right, over to the US dollar CAD now. Same deal here. All of the things that it promised us last week, hovering above the 20 moving average, basically the reverse of the Aussie USD, as we'd probably expect, straight into our resistance zone at basically the 135. Hopefully, I know a lot of you got this trade actually because I saw the emails, and that's really, really good. It was a pretty comfortable trade. I was pretty happy with this one as well. We had a really, really good rebound. It was good price action on the smaller time frames, above the 20 moving average, and the target was clearly hit. Obviously, it shot through. Look, like I said, don't ever regret those pips that you might leave behind because you think you've taken your profit a little bit earlier. It's always wise to take the profits at the level where you expect it to stop. If it keeps going, just watch it and then let it come back. Don't try and jump in again or do anything like that until you've got a meaningful technical reason to do so. It's extraordinarily important to make sure that that is the case. Okay, you really want to make sure that there is a technical reason to trade. Don't be disappointed if you've left some on the table because taking profits where they need to be taken is far more important. That's a really good habit to get into. What happens from now is going to be really up to what the smaller time frames do. If we see a bit of a reversal at this level, you can see we've had two failures already on the daily candles to continue higher. So it may roll over a little bit and pull back down to a 20 moving average. That's what I'd be looking for. I probably wouldn't be thinking any further than that at this stage unless it breaks the 20 moving average on the way down. That's not probably the preferred trade right now, but we could potentially counter trend this move up down to the moving average if we see a series of lower highs and lower lows on a smaller time frame. So again, pretty good trading on the CAD. Over to the US dollar yen, the powerhouse that is the yen again. You can see here, it did all the things it promised to do, landed on the 20 moving average last week. You can see here, and then off it went. Perfect trading 101. This is exactly what we want. Even if you missed the initial move up, like once it hit the 20 moving average and this candle closed above it, all that price action there, this was your entry point at 145, sort of 70-ish. When that candle opened again higher again, that was your entry point really. And hopefully, so you had an entry point here, But realistically, target has been hit. The 148.50 was the target for this one. You can see all of that support there was a very, very good reversal zone. So it's not to say that it won't go higher, and it may well do, but it's a different trade altogether now. It needs to break through there and potentially test that from above before it would get me excited. The meat of the trade was definitely through this area here. So hopefully you were able to get that. It was several hundred pips. So a really, really good trade on the yen. Look out for weakness now. There's certainly none there. The MACD's only just started to rise, which is telling us that the 12 and the 26 MACD has not only crossed, but is starting to separate. So really for the short-term time frames, that bodes well for a lot of momentum. Obviously, we're about to get a 2050 cross, short of a catastrophic move down. These will cross in the coming days and weeks, and that may help it push higher to the previous highs of around the 150 and 151. But for now, we'll look for small momentum changes around this level. It may pull back, but looks a little bit stronger than the CAD in my opinion. So just be careful on the shorts here, because it could be a very, very short endeavor to move down and rebound. But if it does, I'd be looking for probably that 147 level and maybe a 50 or 20 moving average if it gets up there in a timely manner. But it's still got a little bit of work to do to catch up. Good trading on the yen. Dollar index looking like it wants to go stronger as well. Look, it broke out of this zone that we were talking about last week. I did say that once it does break out here, it's going to move probably pretty aggressively, and that it did, straight up to the level that we wanted, 103.50. Of course, the euro is the one we would have wanted to trade in this instance because it's the inverse. So good trading on the euro. Actually, we'll go to that in a second, but we are at resistance here. So we're going to be mindful that the 103.50 is a bit of a resistance zone for this. There's stronger resistance at 104 though, and 104.20. So I'm very conscious of that. If we see a daily close above this 103.50 and we get a little bit of momentum shifting on the smaller time frames stronger, I would be looking at a 104 to 104.20 exit on that one. But the euro, of course, is the one we really want to look at because that's the easiest one to trade. Once we saw this action around here, we knew that it was struggling to get past. We had MACD divergence happening everywhere. You can see here, even though that was a technical double top on a smaller time frame, if you go to a 1 hour, you'll see a double top at this level at a point of resistance. We had MACD divergence, of course. We had bearish divergence there. So it was a relatively easy trade to get into. Hopefully you were able to take advantage of that because it gave us a pretty good sell all the way down to the 108.50, which is the target that we had set several weeks ago now. So I know some of you did get that, which is good. It was very, very easy trading on the 1 hour. Okay, so hopefully I'll go and show you. We'll have a look at what we're talking about here. Let me just auto correct the 1 hour chart. Okay, and you can see once it tipped over, this is the level that it was struggling at. You can see that it was starting to look weaker and weaker. Let me just pop it through here. Okay, all this sideways action that we knew about, but once it broke that low there, we were in. Okay, once that level got broken is what we were talking about. Then a bit of a retest, bang, down again, retest down, all the way down to support. You had about 3 different opportunities to trade there. If we're going to go looking for longer opportunities now, back up to this level, back to that 109.50, which is only 100 odd pips, a little bit less. But really, that's probably the target. You're talking about a 50 or 60 pip scalp. We need a series of higher highs and higher lows on the 1 hour and trading above the moving averages, of course, on the 1 hour time frame. Okay, so that's what we're looking for on that to trade it back to this level here. But if it gets a daily close below the 108.50, we're going to start targeting the 107.50 after that. It goes down in pretty even increments as it went up in even increments. So pretty good trading on the euro as well. So that is great and it behaved itself perfectly from a technical standpoint. Over to the S&P 500. Look, this one came back, tested the 50 moving average. It is trying to hold up above there. It's done a pretty good job so far. You know, we've got a top up here, potential double top pattern in a bigger picture environment, but the 20 moving average was always going to be a problem for this pattern to fall out. If it did break that level, it was going to be a very different story, and we could be looking at weakness all the way down to 4,600, but it hasn't done that. It's found support at the 20 moving average, and it's fast approaching the 4,800 again. So this is why we always wait and we always respect key levels of support, because it saves you getting into a trade that you really shouldn't have been in until we had proof of concept, and we certainly didn't get that because the 20 moving average did pull it up. It's going to be a very precarious position for it now, because the 4,800 we expect to find resistance there. So really, it's just a case of wait and see. I would be looking at, if we see any weakness whatsoever, I'd be looking down to the 47.40 as the first target, being the 20 moving average and that previous rebound zone. But But at the 4,800, just be very mindful that it is testing a new high. So maybe let it break through first. We know we're getting earnings very, very shortly, and that's going to be very important in the scheme of where this is going in the medium term. So be wary that there is resistance right in front of us. And if you are scalping as a counter trend, if we start to see a series of lower highs and lower lows, be mindful of the 20 moving average, because it's held it up once and there's a reasonable chance that we'll hold it up again. So I hope everyone's had a great week's trading. We've seen some excellent opportunities, and the levels that we talked about last week have all played out and hit their targets perfectly. So hopefully you're able to get hold of some of that action. Have a fantastic weekend, and I look forward to seeing you all next week.